Baba is nearly 25% below $200. To put in perspective, Baba's current price is significantly below its price during the peak uncertainty of C19. What I'm going to do in this video is show you a good buying point for Baba stock and also come up with an exit plan. Then I'll help the smaller account investors with an option trade that requires less than $500. I'm going to jump on camera and show you that trade after I do a full analysis on Baba stock. Before I jump in and flood your pockets with money, make sure that you like that smash button for Uncle Henry and subscribe to the dopest YouTube channel out there teaching you how to make money with options. All I'm trying to do is take you guys to the next level. If you do want my personal help, daily trades, and coaching, you can book a free call with my team to learn about the Weekly Option Income Academy and how I make a ton of money, and I show you how to do the same live 3 times a week. Let's jump into Alibaba stock. Let's put Baba's current price in context. The stock price is trading at a price lower than at the very peak of the pandemic last year. That was a time when the internet was flooded with images and videos of Chinese citizens being barricaded in their apartments, towns writing warnings at their borders, claiming to reject any outsiders, and hospitals being overrun with the sick. At that time, the future of China and the world was uncertain, yet Baba was trading at a price 13% higher than the current price in the market today. To look at this situation in relative terms, the market is saying that Baba has worse future prospects now that China is returning to normal compared to a time in which C19 was crushing supply chains, destroying the health of Chinese citizens, and dampening the money velocity. To me, I think there is some irrationality in the market, and I'm going to explain to you how we can profit off of this panic. The best way I can explain this situation is similar to catching a falling knife. Most people say, well, don't catch a falling knife. It's super dangerous and you can hurt yourself. Well, sure, you can, but this is a good analogy to Baba stock because if you don't try to catch a falling knife, then you will just be like the rest of the comfortable people. And guess what the comfortable people don't do? They don't make a lot of money because they're afraid of taking risk and seeing opportunity for opportunity. I was reading The Intelligent Investor, great book by the way, I'll link it below, and Warren Buffett wrote that the lower stocks go, they actually become less risky and not more risky, which is what most people think. Despite its fall, Baba's business is doing very well. Much like the big tech companies in the US, Baba is becoming a free cash flow machine. For the afraid or uneducated investor, Baba may look like it's trash, and there is a small chance it may go lower. However, for an intelligent investor, you want to invest in stocks when there is blood and uncertainty in the street. Yes, there's instability in China, but to be honest, we have seen that in every single country, including the US. My editor now has the code herself after I've gotten it, and I unfortunately wanted to post this video when Baba was trading under $160 per share, so it took longer than expected. But if you look at the relative performance of Baba versus the S&P 500, it's clear to me the stock is still undervalued on a long-term basis at these levels. I was looking at Alibaba's last earnings call and a few things really stood out to me. Alibaba is best known for its e-commerce prowess, but many investors are overlooking the company's cloud computing business, Alibaba Cloud. In the fiscal first quarter of 2022, Alibaba Cloud reported revenue of $2.5 billion, up 29% year over year. On an adjusted EBITDA basis, Alibaba Cloud swung to a profit of $52.5 million compared to a net loss a year ago. In the coming quarters, Alibaba Cloud will likely sustain its growth as more companies embrace the cloud. 5G, the Internet of Things or IoT, and driverless cars are just a few of many secular long-term drivers of cloud demand. This to me is a standout factor because all of the great tech companies are playing in this field, so obviously it's a very lucrative field that's only going to continue to grow. Cloud has an outsized opportunity for growth at high profit margins. Alibaba's influence in China extends through a variety of business segments, including retail marketplaces, logistics, wholesale, cloud computing, digital media and entertainment, innovation initiatives, and venture investments. Alibaba also owns a 33% stake in Ant Group, a massive payment company in China that operates Alipay, which processes more than half of China's third-party payments. In other words, Alibaba has exposure to many aspects of the Chinese consumer and their economic activity. having a stake in the consumer is the most profitable business to be in, just as we have seen with Amazon. My man Jeff Bezos can spend $30 million a day and not feel a change in his net worth. Now, before I go over some options on Baba, I want to wrap up with one more fact I was looking at. Even though its share price has been slipping, Alibaba's continued growth is putting the stock at a lower valuation. The stock traded at a price to sales ratio of almost 8 last fall, but today it's under 4 using expected full year revenue for 2021. From an earnings standpoint, we can use the price to earnings ratio to get another look at Alibaba's valuation. The company is expected to earn $9.70 per share in 2021, resulting in a price to earnings ratio of 20, roughly 1/3 of Amazon's current PE ratio if we use its estimated 2021 earnings per share. So to me, this growth stock is trading for value stock prices, and I believe the political risk is worth holding this name. Now let me show you that option trade that I promised. Uncle Henry back in the house, about to show you how to make all kinds of gains, and I can already read your mind, guys. I can already tell what you're saying. You're saying, Henry, I might not have the biggest account right now. I might even have a small account, but I'm trying to make some good money, some high returns, and I want to know, how do I place an option trade under $500 that will make me a lot of money? And I'm going to tell you guys how to do that. And what I'm going to do right now on Alibaba is I'm going to trade a put credit spread. A put credit spread is using two different puts. They close each other off. I'm going to sell one put. I'm going to buy another put. The total collateral required is going to be less than $500, and you're about to make a very, very high return right now. And I'm going to show you how to do that. So as you guys can see right here in my screen that I'm sharing, Alibaba, I have already been trading this strategy. I've been making some trades in my private group, and I have already earned $238 and about 70%, I guess. That's what it says. 70% is a very, very high return. So what I'm going to do to place this trade right now, a put credit spread again, is I'm going to go to trade Baba options. And actually, I'm going to show you how to look at a stock, how to analyze a stock real quick, how to look at the technicals, because I'm trying to educate you guys here. I'm trying to make you kings and queens on how to make a lot of money. So what I'm going to do right now is I'm looking at the Alibaba chart right here. Clearly, the stock is being absolutely destroyed. If you take a look at the RSI right here, it's at 33, guys. So let me give you a little bit of a sense here. When a stock RSI is at 80, that means it's overbought. That means everyone is liking that stock. They're like, that stock's juicy, let me get in. And when it's 80, that basically means that too many people have bought the stock. The stock is trading at a way too high of a level. And of course, even 70, to be honest with you, 70 is getting into that high territory. Now, if we take a look at a stock that's at 50, that means it's right around where it should be. Now for Alibaba, it's at 33. Now, to give you some perspective, 20 would be oversold, complete opposite of 80, right? Everyone wants a taste of that stock. It's like a little, like a candy shop. Everyone's like, oh, I want that lollipop. At 20, it's like, oh my goodness, we got a pandemic going on here. This stock is absolutely bad. It's gonna crumble, it's gonna burn, whatever, right? So that's what 20 would be. Now 33 is very low. So that's a good thing in terms of a put credit spread, because what a put credit spread does in terms of option trading is you're betting a stock will not go too much lower. And if it doesn't go too much lower, you get to keep the premium that you collect. So I'm about to show you how to collect some premium and make some money. For Alibaba, because it's at 33, I feel very confident in selling a put credit spread, because I don't think the stock is going to fall that much lower. And even if it does fall a little bit lower, that's going to be okay, because I'm going to show you how to pick the correct strike price of selling this put credit spread option. So what I'm going to do real quick is I'm going to go to indicators. I'm actually going to put moving average, because I want to see where Alibaba has been in the past 60 days. And if I take a look at that, it's been at $202. So clearly the stock has been absolutely destroyed. It's way below the moving average. So the next thing that I want to do is, I already looked at the RSI, explains to you a little bit what RSI is. Moving average gives you a sense of where the stock has been trading in the past 60 days. And obviously we know where the stock is trading at currently. So the next thing that I want to do is I want to look at Bollinger Bands, and Bollinger Bands are fantastic because they give you a trading range of where the stock is likely to trade within. And that's very important, because if you're selling some spreads, some put spreads to be specific, you want to make sure that the stock doesn't fall and hit one of your strikes, because if it does, you are going to be in trouble. But luckily in my trading group, I'm 97% successful. So this is going to be Well, based on my past trading experience, a 97% success. So I'm going to put 3 standard deviations. 3 standard deviations tells you that you want the range to include about 95% of all the possibilities that could potentially happen with Alibaba stock. So 3 standard deviations is what I'm going to do. I'm going to click save, and now we have a range of trading for Alibaba, and I'm going to click 5 days because I'm going to make a short-term trade. And 5 days, unfortunately, doesn't give us too much info in terms of short term, but we can see here that when Alibaba had this huge gap upwards, it became overbought at a certain point. As you guys can see, it was overbought and then it started to sell off, and it actually had quite a big sell-off. But I think 5 days is going just to be a little bit too close. So if I go to 1 month and I zoom in here, I want to zoom in and see what this level is. I think it's 138, it says right there. So 138 is actually going to be very, very low, but that's actually going to be possible still because Alibaba options most likely have a very high amount of implied volatility, which is going to be good because when you're selling options, higher implied volatility means there's going to be higher premiums. So let me go down to about the 140 level because 138 is the bottom of our Bollinger Band here. So I'm going to go to 140. And yes, unfortunately 140 is a little bit low, but actually that's going to be perfect here because I see a trade possibility that's going to be a very, very low amount of capital needed. So what I'm going to do here, guys, is I'm going to open up the 140, and that's a very nice option to trade because as you guys can see, a nice even number 140 is going to have good volume. So the volume here is 230. And the bid-ask spread is also pretty decent. You ideally want the bid-ask spread to be as tight as possible. And 36 on the bid and 40 on the ask is fairly tight. That's only a $4 difference. So what you're going to do if you want to make money in a small account trade, and it's going to be a put credit spread, is you're going to do sell put. I'm going for September 3rd, which is 1 week away from today's current date. Unfortunately, the market is currently closed because I'm in Europe and it's like 6 in the morning for the East Coast. So I'm just going to show you how I would place this trade, and I will place this trade when the market does end up opening. So I'm going to click 140. I'm going to click sell this put. And now what you want to do to close off this put spread, because if you just sell a 140 put, well, obviously you need all the collateral to sell a 140 put. But to get rid of the necessity of needing all that collateral, what you do is you just buy the option below 140, which is the 139. Now I'm going to click buy this put. And as you guys can see, it's $7, but it's very interesting because all the capital that you really need here is $93. And that's because when you sell the 140, but you buy the 139, your only risk is right here in between if Baba were to close between 140 and 139. Now, as long as Baba stays above 140, you're going to be making money because the only way you lose is if the stock goes below 140. And I don't know about you guys, but the stock has already been absolutely crushed. So in this trade specifically, you only need $100 and you're collecting 7. So in fact, you don't even need $100. You only need 93. But a lot of people will say, well, this is really dumb because you're only making $7 and you're risking 93. Well, yes, that is correct. However, if I open this up and I look at Delta, the chances of this actually happening is about 5% because the delta is 0.5, which means your chances of success is 95%. So your chances of success are extremely, extremely high. In fact, out of 100 trades, 95 of them are going to succeed and only 5 will fail. And with those 5, you can also use strategies like rolling. And I have a video on that below in the description, but you can also use strategies like rolling or closing the trade early if you see that it's not going in your favor, or honestly just taking a loss once in a while, because when you win 95 times, even when you lose once in a while, it's actually not going to be a big deal and you'll still make a lot of money long term. So in this trade right here, you're going to collect $7 and you're risking 93. However, if you want to actually go for a little bit more risk, I'm actually going to show you another trade that will require very little capital again, but actually it may even give you a higher return. So I'm going to exit out of that trade basically. And if you are a little bit more of an aggressive investor And in fact, if you look at Alibaba and you see that it's already near its very lows, especially if I go to like 3 months right here, you can see that it dipped at like 157.96, but that's a very low point for Alibaba. And if I actually go to summary, the 52-week low was $152. So if you're going to bet that, hey, Alibaba is not likely to go below the very lowest trading point in the past 52 weeks because the stock has already been absolutely crushed, then you can actually trade a put credit spread all the way going up to about $150. So what you can now do to add a little bit of risk onto your plate is by selling the 152.5 put, let's say, and buying the 150, and now your premium is going to be a lot higher. So your premium is going to be $23. And if I scroll down, yes, you still have to risk a little bit more money here, but now your return is going to be a little bit higher and you're going to collect a little bit more overall money because you're collecting $23 and you're only risking $227, which actually happens to be right around 10% in one single week. And here in this trade, as long as Alibaba stays above $152.5, you're going to end up collecting the entire premium here, $23 regardless, but you're also going to get all the capital back, all the collateral back on September 3rd here, and you can actually end up doing the trade over and over again. As long as it doesn't go below your strike price, you can continue collecting 10% weekly returns. Now, obviously 10% weekly returns is very high, so I wouldn't expect this to happen maybe 10 weeks in a row. However, this is still a very high probability trade because if I go to 152, the delta is still 0.15. So 85% of the time you're going to end up being successful. And in this case scenario, you're going to collect about 10% returns, which is absolutely fantastic. So put credit spreads are some of the best ways to use a small account and grow it very quickly because as you can tell, if you can make 10% returns, even on a semi-consistent basis, you're going to end up growing a small portfolio very quickly. You're obviously going to build wealth fast, but you do need to be careful because the risk is if you go too aggressive and you sell put credit spreads that are too close to the current stock's price and it ends up going below your strike price, you will end up losing the collateral that you put. However, I've again been 97% successful and I've been very profitable using this strategy, and this is one of the top strategies that I teach my students. So this is what I do for my students. I trade live, I answer questions, and I show them what I'm doing for my account and how I'm growing it. And actually, I have a small account trading scaling challenge that I'm going to be starting on Monday, where I take an account from $7,000 and I'm going to grow to $17,000 using these type of strategies like spreads and iron condors solely because I want to show people how to grow a small portfolio. And I've gotten a lot of feedback from students telling me that they want to know how do I take a small portfolio and how do I grow it aggressively without having to need to sell puts or covered calls, which require usually a little bit bigger of an account, and without doing long-term investing because I'm not getting the type of returns that I want. So if you do want to see that challenge, then make sure to book a free call with my team below and talk to them about that challenge. Thank you so much for watching, and I'll see you guys in the next video. No one ever sees me.